This episode of On the Record is brought to you by Weisler Engineering. Whether you need low power for occasional use or high power for the toughest jobs, Weisler's PTO drive shafts have you covered. To learn more or to find the right PTO for you, visit www.weisler.com.
I'm Associate Editor Michaela Paukner. We're here at the National Farm Machinery Show in Louisville, Kentucky. Welcome to On the Record.
During its Capital Markets Day held February 22nd in Miami, CNH Industrial announced its updated strategic plan. CEO Scott Wine shared 5 strategic priorities: customer-inspired innovation, technology leadership, brand and dealer strength, operational excellence, and sustainability stewardship. Core to the strategy is CNH's focus on technology leadership and automation and its commitment to delivering a fully autonomous farming cycle while increasingly extending the expertise to enhance the capabilities of the construction segment. Chief Digital Officer Parag Garg says the Raven acquisition puts CNH in a position to leapfrog the competition. He also shared 4 pillars of precision technology, including customer obsession, tech culture, tech stack, and a healthy and conducive partners ecosystem. During the event, CNH unveiled financial targets and capital allocation priorities for 2022 to 2024. Key targets by 2024 include total revenue of $20 to $22 billion, and margin expansion is expected despite a near doubling of R&D and capital expenditure investments from about $2.2 billion between 2019 and 2021 to about $4 billion between 2022 and 2024. Associate Editor Michaela Paukner attended CNH's Capital Markets Day. Keep an eye out for extended coverage from her interviews with executives in Ag Equipment Intelligence. This week's dealers on the move include Empire Tractor and Champlain Valley Equipment. Now a 7-store New Holland and Kubota dealer, Empire Tractor has signed an agreement to acquire Waldorf Farm Equipment in Watertown and Canton, New York. The deal is expected to close in about 30 days. Vermont New Holland and Kubota dealership Champlain Valley Equipment has acquired Essex Equipment's Kubota dealership in Essex Junction, Vermont. Champlain Valley now has 5 locations. Now here's Michaela Paukner with the latest from the Technology Corner.
Thanks, Tim. I'm here at the National Farm Machinery Show with Dwayne Martin of Wakarusa Ag Services. He's telling us about this electric skid steer today.
We're here at the National Farm Machinery Show, introducing the world's first electric skid loader here, truly powered by electricity. It's got a 96-volt, 400 amp hour battery, driving 2 electric drive motors to drive the drive functions, and then an electric motor to run the hydraulic functions, which controls the booms in the bucket. And we truly believe this is revolutionary to the industry, giving us lower operating costs, less moving parts, and bringing the opportunity to go into confined spaces without emissions.
And what do your agriculture buyers think about this machine?
It's a new idea, so some of them are hesitant and some of them are very glad to see it. Personally, myself, as a dairy farmer, operating Tier 4 final engines in dusty conditions with skid loaders, we're seeing more fires and more engine failures than we have in the past. I believe this is the answer to that problem, given a lot less moving parts, no heat from an engine, and just less maintenance on the machine without oil changes and air filters and radiators to keep clean. Well, if you look at it, it looks a lot like a diesel machine. You got the same functionality that a diesel machine would with standard skid loader hookups, where you can hook up to any other attachment that's on the market. We've got the auxiliary hydraulics. We also have electric auxiliary, which Kovaco is making a lot of electric attachments to hook up to this machine. Then instead of running an orbital hydraulic motor, we'll be running an electric motor, which is more efficient than the hydraulic. The biggest thing I like to say about these machines that excites me about them is just the operating costs and savings you're going to see running with diesel. We're looking at on a large machine, we're looking at over $10 an hour in operating costs on consumables, diesel fuel, oil changes. And for these, you're going to be looking down around that $2 an hour in electric costs, depending on what your power costs are. But significant savings that it's really a hidden cost in the industry. You don't really think about it. You're putting fuel in every day. But I think there's lots of opportunity here.
Thanks, Michaela. Our editors are currently putting the finishing touches on Ag Equipment Intelligence's Electric Farm Machinery Outlook through 2027 research report. This in-depth report will be released on March 15th. Visit agequipmentintelligence.com/electric report to order with the special early order discount. Along with announcing its first quarter earnings on February 18th, Deere & Company announced its new goals it's calling the LEAP Ambitions. The goals are linked to the Smart Industrial Strategy and Operations model Deere first introduced in 2020. The ambitions are designed to boost economic value and sustainability for Deere's customers, as well as for employees, investors, and other stakeholders, the manufacturer says. Deere is committed to achieving these goals over the remainder of the decade. Part of the 2030 LEAP ambition targets include achieving 2030 equipment operating margin of about 20% over the course of the cycle, says Stifel analyst Stanley Elliott. Deere is also looking to achieve a 10% recurring revenue mix by 2030 and expanding the addressable market by more than $150 billion, he says. Elliott says the improved financial performance is expected to be driven by execution on a number of strategic initiatives, including incorporating digitization, automation, autonomy, and electrification into products. Most notably, this includes See & Spray and autonomy technologies that have been unveiled, which should drive an increased total addressable market, higher recurring revenue through a subscription model, and improved margin performance. Now here's Ben Thorpe with a data and trends update.
Thanks, Kim. According to a February 9th report from USDA, nitrogen fertilizer prices spiked at the end of 2021, due in part to a shortage of natural gas. According to the report, by December of last year, average monthly spot prices of natural gas at the Henry Hub distribution hub in Louisiana were up 45% year over year. USDA Economic Research Service estimates an annual price increase of 235% for anhydrous ammonia, 149% for urea, and 192% for liquid nitrogen, using data as of December 2021. The report stated, researchers expect the spike in fertilizer prices to affect producer decisions heading into the 2022-2023 marketing year. According to the February update of the Ag Economy Barometer from Purdue University, when asked about their nitrogen application rates, 57% of corn producers said they intend to use the same nitrogen application rate in 2022 as they did in 2021, while nearly 4 out of 10 corn farmers said they intend to reduce their nitrogen application rate compared to last year. Back to you, Kim.
Kubota reported $7.1 billion in North American sales for its fiscal year 2021, a 27% increase from its 2020 North American sales. This was a record high for the last 10 years. Kubota's North American revenue has risen every year for the last 10 years, aside from a 5% year-over-year decline in 2020 to $5.6 billion. Total revenue has also maintained a steady increase in the same period, aside from a roughly 3.6% decline to $16 billion in 2020. Note, this breakdown includes revenue from Kubota's Water and Environment segment, which in 2021 made up 14% of its annual revenue. Kubota does not report data on its Farm Equipment and Industrial Machinery segment, which encompasses its farm equipment, engine, and construction equipment business, broken down by region. This segment made up 85% of Kubota's 2021 annual revenue. The percentage of Kubota's annual revenue coming from the North American region has also risen every year for the last 10 years, aside from a slight decline to 34.9% in 2020. The percentage reached a record high of 37.3% in 2021. In its 2021 earnings report, Kubota stated overseas revenue in its Farm and Industrial Machinery segment rose 27.8% year over year to $13.5 billion, and that its North American sales of tractors and construction machinery increased significantly due to strong demand. The company forecasts a 12% increase in annual revenue in 2022 to $21.2 billion. As always, we welcome your feedback. You can send comments and story suggestions to kschmidt@lessitermedia.com. Until next time, thanks for joining us.